Tuesday, September 10th, 2013. Trading futures, options on futures, and foreign currency involves substantial risk of loss. It is not suitable for all investors. My personal opinions, market data, and recommendations are subject to change without notice. Past performance is not indicative of future results. Let's start out the day by looking at overnight news and what has hit the wires. See if that shapes the day. That's why I do it. The key news is U.S. President Obama said he wouldn't say he's confident that Congress will vote to authorize use of force in Syria, and that he has not decided whether to use military force in Syria if Congress votes no to plan, and will evaluate after the vote. In addition to that, the Russian foreign minister says they're working with Syria on concrete chemical weapons plans. Yesterday, they had come out and said that it would be possible that Syria would give up their arsenal of chemical weapons to the international community to destroy, per the Geneva Conventions. They said they would support action against Syria if chemical weapon use was proved. So they're kind of throwing it back on the U.S. to prove that it was Syria's president who ordered the chemical strike on those people, the 1,400 that died. In other news, Chinese industrial production year over year, 10.4% versus 9.9 expected, so better than expected. And Apple's WWDC release due at noon Central today. For those of you who trade the NASDAQ, you might want to pay attention to that, with the expected release of the new iOS software and 2 new iPhone models. That's today. Other than that, I'm not really seeing anything really fantastically significant. There's just bickering back and forth. Feds Williams yesterday said we'll go into September FOMC with open mind, agrees 100% with Bernanke's timeline on reducing QE. So there's no news on the QE front, and that's really it. As far as economic news, the economic releases, we're looking at 755 Red Book, which just came out. What did that come out at? It's not really important, but month on month for September, 0.3 versus 0.6 expected. Please note that the ECB's Asmussen is talking currently, so you might see fluctuations in the euro in response. More headline risk there. He says it's too early for ECB to exit loose policy. ECB ready to act if conditions deteriorate. Policy instruments make ECB exit easier. Crucial that central banks clarify reaction functions. I'll keep informing you as he speaks. ECB's Asmussen says publishing minutes would sharpen ECB's mandates. So they're talking about doing the same thing the Fed does with the minutes. Back to economic releases. Looks like 9 a.m. U.S. job openings, the JOLTS number, there's no expectation. And then 3:30, which is after the market, you have the API release for energy, crude oil, and gasoline. That's it for economic releases. So I don't see this being a heavily release-driven day. It's more of the same, more Syria, more uncertainty on that end. Speakers, we're looking at 9 a.m. Central, 10 Eastern. U.S. Defense Secretary Hagel and Chairman of the Joint Chiefs of Staff Dempsey testify on proposed strike on Syria. So keep an ear out for that. That may be on C-SPAN, I'm not sure. 9:30, Merkel again, blah, 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 with her election campaign. Of course, the 12 o'clock Central, 1 Eastern Apple iPhone announcement. Very important. And then that's really it. Tonight at 8 o'clock, the President speaks to the White House. As far as auctions, 10 o'clock, Fed's tips purchases, 1 to 1.5 billion, nothing really significant. At 10:30, there's a 4-week T-bill auction in the value of $50 billion. And then at noon, there's a 3-year note auction in the value of $31 billion. No earnings, and that's it for the releases. So let's move to the technical end of things. I'm going to focus here a little bit on the ES, as it is the most popular product. Let's see, too many screens. So let's start with looking at the core market measurement, and that is value. Okay, and as I said in the prior Trader Bites, and I'll say again in this one, it's so important to track the movement of value versus the movement of price alone. These are volume profiles, and to get more information and more in-depth detail, as well as a glossary, just visit futurestrader71.com, futurestrader71.com, or ft71.com, just to understand the acronyms that I'm using. So the red line here is VPOC, volume point of control. It is the most traded price for the day. And as I said yesterday, and the day before, and the day before, and the day before, it seems like the bottom has been put in. We have a balance zone, and I called that in here. We have a balance zone, and then suddenly value is starting to creep up. And so the trend, as far as I'm concerned, the trend is up. And it continues higher. Yesterday, we expected the test of 69.25, 69.50. We got that. And then we finished with VPOC on the high end of the range, a double distribution profile, which may show a little bit of weakness because it's left some areas behind that are unauctioned. So, you know, buyers, some buyers may need to wait for that to see how that reacts before gaining confidence, and also lower prices would spur buyers to buy more, you know, the usual bargain shoppers. But you can see value here is even when it's expanding, it is going higher. So the overall trend is up. Currently, the S&P minis are trading 1679.75, heading towards 86.75, which is the quarterly. It's the 2-quarter VPOC, and basically the key price in this upper value area, in this upper balance, and that's where we're headed. For those of you who heard me on daytradingradio.com yesterday, I'm doing a segment at 11 Eastern or 10 Central on Mondays, just talking about the markets in general. I had said that the 1705 top is, to me, is very weak from an auction perspective. A lot of volume traded up there, and it traded multiple times, and therefore it's not considered a it's not really considered an excess price. An excess price would not have these heavy fat profiles at the top. It would look, an excess price looks like this. See those little boxes there? Those are volume boxes, and you'll see a lot of those. That's an excess price, and you would expect the trend to reverse when that happens. On this, we had an excess. We did not have an excess price. We had a weak high, but the ensuing news caused this to kind of fall off. But it did not fall off on value. Did not fall off on its own auction basis. It was forced to fall off on another basis. So I expect the market to go back up, test this balance. I expect us to get stuck here for a bit, maybe for the rest of the week if we get up there. If not, you know, come back down. And then I expect that we would eventually test that 1705 high, because it is a weak high. Okay. So overall, what do we have? We have a market that is in price discovery mode, meaning if we have a market that is not agreeing on prices and is seeking higher and higher and higher prices and keeps finding more and more buyers as it seeks higher prices. So the trend is up, meaning if you're short or getting short, you need to use caution. You need to define your risk. You need to define your risk anyway, but you need to define your risk especially if you're short, because the market is moving against your direction. That's what that chart shows. The 15-minute day-only chart. This chart shows the trend being established downwards from this top, the balance broken, retested on the Putin news, and then climbing. I'm not ready yet to put a trend line on this. What this is showing me, it's 15-minute bars. What it is showing me is that yesterday we had that strong open, and then we consolidated for the rest of the day. I had a suspicion by the last hour of trading that we may sell off yesterday because of the way the day was structured. There was just very thin volume below, and I'll show you that in a second. But what this chart is showing me where the balance areas are. On a shorter time frame, it's showing me where we are on this composite, and it's telling me that we're back in the gap zone. The gap zone starts at 69.25 and goes up to about 81. 81 or so, and so we're in this. So I think the last thing I said yesterday might have been in the Stage 5 chat room where I talk all day, or I don't know if it was on Twitter. I said I expect 75.50 to be tested overnight, and so it did. Doesn't mean I'm always right or expect to always be right, but the market follows a pretty consistent logic. And our job as traders is to exploit that logic with probabilities. So here's yesterday's trading in 15-minute intervals. What you're seeing here is the profile or the volume at price for that particular day. This is a day session only. So you can see we popped up, put in the IB, and just whittled around, and then started to move up again. I think it was a news-based event. I think this is when Russia announced that it's working closely with Syria to come up with a solution where the chemical weapons will be given up to the international community, and we start to just move up. So war is being taken out of price, the negative effect of war. But it did leave some pretty weak structure below. We have a nice VPOC, good neckline here at 63, then a kind of a weird high volume node, another neckline which represented the mid by the end of the day, another high volume node, and then the key neckline for the day is right up here. So this level here is no longer any good. I'm going to move that up to the key level, to the key LVN, low volume node, erase this, and then take it from there. So we're in the gap zone. In the gap zone, I know that I'm not going to be a stubborn fader or seller in the gap zone. This is an area that was not auctioned. See this? We had this low at 81. We gapped through down and we opened at 69, tested up. We had an open drive down, and then it started this sell-off process, recovered a little bit, then we had the Syrian news, gap down, left this gap behind. This gap is no longer valid. Boom, it's gone because we traded back through it. But essentially, I will not fade a gap, although a lot of times it would stop at the mid, which is 75.50. That's the target that I set out. Note the overnight high right here at 81.25 is right at the gap high. Is that a coincidence? No, it's not. What the market's doing is it's moving back into the range of August 14th, which means that now I need to bring August 14th into perspective and check to see what kind of footprints has it left behind. So August 14th key LVN is 88.25. That's going to get a line for me. Okay, I can erase this. And that's really it. Above 88.25, there's very thin volume, so I would caution against selling above 88.25. The naked point of control for that day is at 84, so that would be the key target this morning. And then beyond there, 87. I'm sorry, not 87. This is an old level. 88.25 and an 88.25 hands off the sell button. Okay, and that's really how it's shaping up. We are going to open out of range, out of value. We need to check the balance zone in this area. Looks like it's clear up to 86.75, the MCV-POC right here. This particular volume profile represents all trading that occurred in this upper balance zone. Very important area here. So again, that lines with, actually that's what that big line was. Let me put that back on here. 86.75, so 86.75. Upper balance MCV-POC. And boom, there it is. So now it's marked. And so now I have what I need to look at above. Below, I have my point of control, and then I have my key LVN, and that's going to be the cutoff point for the day. That's the area I expect some support to occur. Beyond 68, you would be looking all the way down at 63.5, and then but the buyers would be in trouble in that situation. So that's really it for the day. You know, as always, watch your risk. I mean, that's what you, as a trader, that's what you have to be best at. You have to define, you have to balance the probability of a positive outcome by knowing your edge, along with the risk reward you would get for taking that probability. So every combination of circumstances that you're trading would provide you with some sort of a probability. Hopefully it's better than 50%. If not, then you need to compensate for it by having a return that's much higher than the risk. But in either case, every single trade you take is going to cost you your stop if you're wrong, and be prepared to be wrong. Do not be someone who sits there and gives away an entire account, as we often try to prevent and see here at Stage 5, by stubbornly holding on to one trade. I'm sorry, but it's just the dumbest thing to bet your entire account on one trade because you just did not define the risk and you're getting stubborn. The market can get away with you, get away from you quickly, and it's natural for within human behavior for people to seize up. But always define your risk. And you know, someone in our chat room saying I'm frequently off by one tick from what I'm doing, my homework. But the fact is, the fact that you're doing your own homework is a key starting point. Do not take what I'm showing you here as gospel. Do not trade the levels I'm showing you here for what they are. I'm giving you a way of looking at the market, and there are many, there's an infinite number of ways to look at this market, including, you know, flipping a coin. And by the way, flipping a coin a lot of times has a higher return than most people who trade with a purpose and without a plan, with no risk. Anyway, I'll leave you with that, and hopefully you enjoy the broadcast. And this is just an easier way for me to post my morning view without having to do so much typing. I'll catch you tomorrow morning. Take care.